Your conference is being recorded.
Ladies and gentlemen, good evening and welcome to the Stallion India Fluorochemicals Limited Q2 and H1 FY2025-26 results conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on a touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the floor to Mr. Parth from Concall Partners. Thank you, and over to you, sir.
Thank you, and good evening to you, ladies and gentlemen. This is Parth from Concall Partners. We represent the investor relations for Stallion India Fluorochemicals Limited. On behalf of Ventura Securities and Concall Partners, I warmly welcome you all to the Q2 and H1 FY25-26 earnings call of Stallion India Fluorochemicals Limited. So the company will be represented by Mr. Shehzad Rustamji, who is the Managing Director and CEO. I would now like to hand over the call to Mr. Shehzadji for his opening remarks. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and a warm welcome to Stallion India Fluorochemicals Limited Q2 and H1 FY25-26 earnings conference call. We are pleased to share yet another quarter of robust performances reflecting the continued strength and resilience of our business model. For the second quarter of FY25-26, total revenues stood at 105.75 crores, making a solid 55.6% year-on-year growth driven by higher volumes, improved product mix, and strong demand across key end-user industries. EBITDA for the quarter surged nearly sevenfold to 15.77 crores, with margins expanding to 14.9%, while PAT increased more impressively to 11.42 crores. For the first half of FY25-26, we achieved a total revenue of 216.3 crores, representing a 52.8% year-on-year growth. EBITDA for the period almost doubled to 30.14 crores, and PAT increased by 135% to 21.78 crores. Underscoring the operational leverage we continue to realize through scale, efficiency, and strategic pricing discipline. This is in spite of a challenging macroeconomic backdrop characterized by global tariff-related headwinds and cyclical slowdown in certain sectors. We have already achieved over 50% of our full-year revenue guidance of 430 crores within the first half year. With H2 traditionally being the stronger period for our business, we remain confident of achieving our growth targets for FY25-26. From a strategic standpoint, the first half of the year was marked by significant progress across our integration roadmap. Our 10,000 metric ton R32 manufacturing facility in Bhilwara, Rajasthan, currently under development, will provide backward integration and strategic control over our most critical raw material, ensuring our cost competitiveness and supply reliability. In parallel, the upcoming Mambatu facility in Andhra Pradesh, which is our fifth operational site, will enhance our blending and debulking capacity for HFO refrigerants and specialty gases, while also adding semiconductor and helium processing capabilities. We are also expanding the Khalapur facility to strengthen our footprints in liquid helium and high-purity semiconductor gases, targeting India's emerging electronic, solar, and fiber optic industries. These sectors are expected to grow at double-digit CAGRs through the next decade. Our focus remains on sustainable growth, operational excellence, and customer-centric innovation. With 6 facilities, 4 operational and 2 upcoming, a robust pan-India distribution network, and expanding product portfolio spanning over 40 gases and blends, Stallion India Fluorochemical is well positioned to capture the opportunities arising from India's industrial transformation. We continue to target a 30-35% CAGR growth over the next 3 years, supported by backward and forward integration initiatives expected to enhance operating margins by 3 to 4%. Looking ahead, we remain committed to building a fully integrated fluorochemicals enterprise, one that combines innovation, sustainability, and scale to deliver enduring value for all stakeholders. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on a telephone keypad and wait for your turn to ask your question. If you'd like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, to ask a question, please press star and 1 on a telephone keypad. We'll wait for a moment while the question queue assembles. We have the first question from the line of Shreya Masalia from Ashika Groups.
Hello. Am I audible?
Yes.
Yeah. Congratulations for the great set of numbers. So just one question. So that your major raw material is fluorospar, right?
Not currently. Currently, we're not manufacturing, but onwards, when we move into manufacturing, it would be fluorospar would be one of the raw materials.
Yeah. So just wanted to know, like, currently you are importing completely from China, right?
We import from a mix of places. We import from Japan, we import from China, we import from Middle East also now, and we import from the US and Europe. It's a mix. We've been moving away, but to answer your question, the majority part, 80-85% of the fluorochemical industry operates from China.
Okay.
So directly, indirectly, you would be working with China.
Yeah. So just wanted to make sure like the availability of raw material is good, right? Like there is no sanctions from the Chinese government on getting the raw material.
We would be looking at, currently we don't see any issue, number one. Number two, but for the raw materials, we would be looking other than China.
Okay. And also you are putting up the facility to get the raw materials. I mean to manufacture the raw materials, right?
Currently, in the first phase, it would not be fully backward integrated. In the second phase, it would be fully backward integrated. So in the first phase, we would use AHF and MDC for manufacturing.
Okay.
In the second phase, we would move for backward integration of manufacturing AHF and MDC ourselves.
Okay, got it. And like your quarter-on-quarter numbers are quite good. Like you say that your Q1 and Q2 is usually weak, then the Q3 and Q4. So like Q1 and Q2 are extremely good. So the guidance remains the same, like it will be a good quarter for Q3 and Q4 also?
Actually, Q1, Q2 really the weakest quarters that we have.
Yeah.
In fact, it is usually the worst performance that we can ever hope to expect. And this Q1 and especially Q2 with all this geopolitical issues like tariffs, etc., that were happening, it was really a trying test. And in this period that we managed to push the sales and reach this position, the next 2 quarters are the good quarters for us. So we look at achieving whatever we have set out to, maybe more, but definitely whatever we have stated, we will achieve 100%.
Okay, but if you just give us a
Shreya ma'am, I'm very sorry to interrupt you. Could you join back the queue, ma'am?
Sure. Thank you.
Thank you, ma'am. The next question comes from Prasad Vadnere from HDFC Securities.
Congrats on a good set of numbers. So basically, I wanted to get more understanding on the refrigeration quota that the Indian government will allocate in FY27. And my second question is, sir, can we barter this quota with other entities located outside the India geography and also with the Indian geography entities? Thank you.
Yeah, thank you. The quota system that will come in 28 is not decided, or the modalities have not been laid out by the government. In 27, the government will sit, formulate and arrive at what is the best system for India. What is currently quoted by a lot of people is the broad framework of Kigali Accord, in which countries in various regions which have gone in for the phase out earlier to us, like the developed nations moved one period earlier to us. So how they have followed basically is taken as a model framework that, okay, this is how it will be done. One thing is very clear, the baseline years, 24, 25, 26, whatever import, whatever production, whatever consumption, whatever you're doing in the 3 years, the total is added and divided by 3, and that will be the baseline figure. That is what will establish as your quota, the starting point of your quota. So typically, like if you were just giving an example, you're consuming or importing or whatever, 1,000, 3 years you did 3,000, divide by 3, 1,000. That is the the broader frame of how the thing would be evaluated, how it would come down. Number one, has the government taken out any notification? Has the government decided? No, the government has not decided. Is there any authority other than the respective authorities in the government who would be deciding this? No. Only they have the final say, and how they will come out, they will inform in 27. So currently, it's more a broader understanding of how it will be done. The baseline years formula is that is more or less a set thing, but other than that, everything else is speculative. Second is this quotas tradable? Yes, these quotas will all be tradable. In fact, like how carbon trading was done, these quotas also are tradable in many ways. How it will be done? Can it be traded? Your third question, can it be traded within the country and outside the country? It can be done both. Now, usually how this would affect is, suppose tomorrow, this is one of the things that we have always mentioned, when people do a valuation of the company, nobody's even got a clue of what the true value of the company will be when you calculate the quota that will come. Now, what is the quota? Now, tomorrow I'm saying HDFC Securities decides that we want to import gas. You cannot import gas. You have no quota. Only Stallion can import, or maybe the 10, 20 entities who have the quota. Only import can only come through them. The first thing is it's restrictive. It becomes like a monopoly. It can only come through this source. It cannot come through anything else. No amount of money, you cannot do anything. Now, you're a company that wants to grow. I'm saying you're XYZ Electronics. Okay, you're a manufacturer of ACs. Last year you did, say, your production quota has been set. You did, say, 100 tons. I'm just giving an example. This year you've got very aggressive plans. You want to do 200 tons. There's only two ways you will be able to do this. One is your GWP has been calculated, your tonnage has been calculated. Either you move to a lower GWP product. That means, like, suppose if you are dealing in 32 and you want to double your production, there's only two ways you can do it. One is you move to 454B, which is 50% of the GWP. That's a HFO blend that we'll be manufacturing in Mambatu facility. That has got 300 GWP, and 32 has, say, 600 GWP. So if you want to double your capacity, stop using 32, move to 454B. That is how this quota will guide industry to move to lower GWP products. The other way that you can do it is you come to Stallion and you buy the import quota from Stallion and then use it. Now, Solvay, to give an example, very firm of this, Daikin is a company which has grown leaps and bounds in all the regions they've operated. They've been very aggressive in their growth plans, etc. Europe, they had extremely good move and expansion, etc. Now, the problem was they could not, Europe had a very firm quota regime in place. So the only way they could get around was they bought a company called Solvay. And Solvay had a tremendous amount of quotas available. So they bought it over, and that's how the quota operational working is done. So this is the understanding. So yes, the quota can get monetized. The quotas can be sold. There are figures that we have heard of where Chemours has sold the quota somewhere, or some other company has sold the quota somewhere, or offered the quota for sale. So it will be monetized. Tomorrow your valuation will also consider this. Thank you.
Okay.
Thank you, sir. The next question comes from Ranveer Singh from Nuvama Wealth. Participants are requested to restrict to 2 questions in the initial round and join back the queue for more questions.
So, thank you for taking my question. So one question was related to that helium gas. What exactly we are going to do with the helium gas? Because I just see that processing plant would be there. Can you just give a little detail about that? What process actually we are going to do at this facility?
Yeah. Okay. Helium, basically helium is a natural product. Nobody manufactures it. Linde does not manufacture it. Stallion does not manufacture. No company manufactures it. Helium comes out from the ground like natural gas. It comes out first, meaning it would be coming mixed with other gases, etc. So you have to refine it, like how you get crude oil, you get crude helium. You'll be refining it a bit. That is at the plant, at the well level, number one. So you'll remove the impurities, etc. The final helium basically is not a manufactured product. It does not come from a company. It does not come from a process or this. So it is a natural product that exists in the environment, on Earth. So it is from there you will be getting it from the various, like, major places are Qatar. You got USA is one of the largest. Then Russia. So you got like 4 or 5 major places from where helium would be available. Number one. Number two. This is now helium is the smallest molecule, lightest molecule. You cannot transport it in gas form. It'll be very expensive. So you have to bring it in liquid form. So you've got specific containers, etc. It comes in liquid form. When it comes to us in liquid form, it has to be first, what requirement of liquid you have has to be handled in liquid. Now, just to explain to you what is helium, it is liquid at minus 257 degrees Celsius. There is nothing on earth that can get you to bring the temperature as low as minus 257. So how do you retain it in liquid form? It comes in special iso tanks which have got a vacuum layer. Above the vacuum layer, you got a secondary layer in which liquid nitrogen is put. Liquid nitrogen is at minus 200, minus 190 something, and that is what slows down the evaporation rate of helium and allows it to be in liquid state for that 1 month of transit. But still you have operational losses there. Now, handling all these cryogenics and handling and refilling it in liquid, again similar containers, vacuum containers, etc. Transporting it to where the end uses. Where is liquid helium used? It's used in ISRO, it's used in fiber optic manufacturing, it's used in semiconductors, it's used in MRI machines, medical field. It's used in like the Navy where you go for ultra deep, ONGC and Navy where you go for ultra deep sea diving. So you cannot breathe normal oxygen. Your lungs will collapse. So there's a mixture of helium and oxygen. So basically it's used in a huge variety of things. Testing is one of the normal uses that people are aware of as a carrier gas. So basically there's a portion that will get sold in liquid form. There's a portion that will be sold in gas form. Now, handling this is a very specialized thing. Like the iso tank that carries the liquid helium costs $1 million, about 10 crore rupees, just the empty iso tank. Second, the value of the gas is almost equivalent. If you do not know how to handle, you'll have evaporation of that much amount of material with no chance of recovery. So it's a very specialized way of handling. Secondly, with the semiconductor, medical, etc. With semiconductors, you need 6N handling. 6N purity, that is 99.99999 like that, purity. You have to have testing capability. You have to have the knowledge of how to maintain that purity. Meaning, if I give you that 6N purity helium, and you just fill it in any clean new cylinder, your purity will drop down to 4N, 3N. The cylinders have to be conditioned. They have to be of the ability to hold this. You have to know how to handle it, number one. Number two, more important than that is the continual repeatability of your process, where guaranteed you will be able to provide year on year, month on month, the same quality of supply. So when you're supplying for semiconductors, etc., there's an approval process. So you go. So this is how helium would be handled. And the third most important thing is your capability of upgrading. Now, till now in India, it was 200 bar pressure helium that was handled. What is 200 bar? 1 bar is like 14.5 kg. So it's basically the pressure at which the helium is kept. So if in a cylinder, if you are getting like 200 bar pressure, you'll get about 7-8 cubic meters. Now the same cylinder, if you upgrade and you get a 300 bar cylinder and you get a 300 bar complete helium plant system, your same cylinder that you are supplying 7 cubic meters will now supply 12 cubic meters. So your transport cost will come down literally 50% of what it costs somebody else. This is what gives you the cutting edge. Now Stallion, we were just starting when Linde upgraded to 300 bar in India, and they are the only people with capability of 300 bar handling in India. Our entire plant has been revamped, and we will only be having 300 bar systems. So we've upgraded to the best that is available in India.
Yeah,
Thank you.
Thanks for that detailed answer. So I believe that apart from Linde, who are the other players who are engaged in this kind of handling of helium type of gases?
Linde is the largest. Second comes Global Gas. Then you have various players. All the rest are almost equal, like Iwatani, Helios, Life Air, Air Liquide. You got about 5-6 players, all approximately in the same category. The two largest ones are Global Gas and Linde.
Okay, thanks. And another question, if I can. This was the same question I was discussing. Anyway, you can proceed. I'll be in queue.
Thank you so much.
Thank you.
Participants are kindly requested to restrict with 2 questions in the initial round and join back the queue for more questions. The next question comes from Nitesh Dhoot from Anand Rathi Institutional Equities.
Hi, sir. Thank you so much for the opportunity. My question is again on the HFC. If we see, the observation period is 2024 to 26, and we've already crossed the midpoint of that period. So far we haven't manufactured refrigerants, and by the time our plant commissions, we'll be at the fag end of the observation period. So how would we get the production baseline is what I'm trying to understand for HFCs.
One is having production during the baseline period. There are alternate method. There are other ways also in which you can do. Like one, we have said the quotas are tradable. Number two, more than tradable, there are processes in which you would be able to get the quota. Number one, now, the government has not laid down its policy of how it's going to grant what it's going to be doing. So whatever anyone speaks today is speculative. Second, you have companies like Tanfac, which have specifically got the EC clearance done. They don't have a plant. So how is it that they would be going ahead with getting the quota? Obviously, there are processes, there are ways of going about. We would not like to discuss it on an open forum.
All right. Okay. The thing is that, incumbents also have a 65% HCFC baseline advantage. So we don't even have that. So, I was just trying to understand that, how would we be operating at maybe, suboptimal levels later. But again, maybe, I can take it offline with you on this.
Like I said, this is something we would not speak. Meaning, this is what you call the what you call the knowledge and the experience of knowing how to maneuver in this and how to be able to come out and get what we require. If we are to sit and outline it in public, I'll have 10 other people in line starting to do what we are doing.
Yes. Okay. And so just maybe, since you said that, you would be manufacturing AHF also going forward at some point. Okay. So the first thing is, where do you source your MDC from currently? For R32 production, MDC and AHF, where would you be sourcing from?
It would be local, they're sufficient, and internationally also we would be looking other than China for AHF. There are swap deals available. There are various mechanisms in which we can do it. So already the basic discussions and everything are already done and in place. MDC, there's a glut in India.
Right. And any color on the, on the AHF manufacturing, or would it be too premature right now? Maybe?
No, our original plan. See, this is not the first time Stallion has wanted to set this up. Meaning, if you're thinking that after this, Stallion had immediately in 22, Stallion had started the work. In 23, we had already got the whole quotation. We were to set up a 15,000 ton AHF plant. MDC would have been in the second stage. And to complete like 35,000 ton sulfuric, 40,000 ton sulfuric acid plant, 15,000 ton AHF plant, and a 10,000 ton 32 plant. The whole plans were drawn up. We had done extensive work on the reports. We had the whole thing. The 1 year delay in the meaning the plan was 23. We would have been very much in time for the 24 to 26 baseline period. This 1.5 years that got wasted during the IPO process for us knocked that part out for us. So now when we are setting up the plant, the reason we have not gone for AHF is, number one, it would take us minimum of 18 months to have that whole facility set up. And right now we don't have that time. We want to complete in 9 months the basic first stage. So the first stage of the integration would be just the 32 manufacture. In the second phase, earlier we had planned 5,000 plus 5,000. Now we're going for 10,000 at one stroke. Second stage, we would go for AHF and MDC. The reason we would do it is, it would add another 500 crores to our revenues with the same 20% PAT, because currently what we are calculating is at a 20% higher price than what if we would have manufactured. So when we go into backward integration, that would give us that much more revenue stream and that much PAT increase.
Right. Sure. So thank you so much for answering my questions. Wish you all the best.
Thank you.
Thank you. The next question comes from Yogesh Soni from NJ Wealth.
Good evening, sir.
Good evening.
Congratulations for a very good set of numbers. And sir, my question is that why are you so confident into entering the semiconductor gases and other electronic related gases in your product lines and value chains? Can you explain it further? And how the backward integration will help you to manufacture this high, as you told in your earlier conference call, that they are high margin products, semiconductor gases and all. So how the backward integration will going to help you? That's my question.
Okay. Actually, I always get into trouble answering this kind of question because what happens is we end up revealing much more. And what sounds like forward statements or like, projecting very big growth ahead, what we have planned. So we usually try to suppress or speak little on the forward plans. We don't like to speak too much without achieving each milestone. Now, I'll just give you a brief. We have been 35 years in this industry. 35 years has given us enough experience, enough knowledge, enough understanding, global reach of how to do, what to do, how to grow. We approach the capital markets because now from the level that we were to grow above, you need money. So that is why we approached and we became listed and public limited to start achieving the growth. Now it is not that, for the investor group or for the people who are there on this call, it should not appear that suddenly, Stallion says they'll do this, then they'll run and do this, and they'll do this also, and they'll do that also. It is 35 years in the business, 35 years of knowledge, 35 years of wanting to grow in each field. So in each field, we have reached the optimum level, where now if you want to go ahead, you have to now scale up. So yes, 32, our whole understanding and want to grow is the next generation HFOs. We will be setting up in future. When I say future, I'm not speaking very far, 28, we would move into HFO manufacturing. Number one. Number two, why have we done 32? In HFO blends, major component requirement is R32. R32 will also be around in the Indian industry for the next 20 years. So if you do not have a critical raw material like R32, you will not be a very strong or big player moving ahead. You will be knocked out of HFO blends, you will be knocked out of 32 business itself. So it is critical that you have control over what is, so our first step would be R32. Second, you will say, why do we want to go into backward integration of AHF and this? AHF movement is restrictive. AHF players, though there is a glut, by next year there will be a glut in the industry for AHF. It doesn't matter. We can manufacture what we require, plus we can manufacture about 2,000-3,000 tons of electronic grade AHF required in the semiconductor industry. So it gives us control over the basic raw material. Once which you qualify, you're a player in the semiconductor side. 2,000-3,000 tons is not a small quantity of that grade. Third, MDC. Currently MDC 2:1 ratio, we require MDC. But MDC is the basic raw material to make CTC, and CTC is the raw material to make HFOs. So today for 32 also, tomorrow for HFOs also. If we go, so it's not that we are running around that today we'll put up a 32 plant, tomorrow we'll put up a AHF plant. These are all interconnected. If you understand the industry, you understand the business, you'll understand that once you have the complete backward integration portfolio in your hand, you become a very strong integrated player. Our peer industries, our peer companies that are there are beautifully integrated. They're very, very strong companies. They're very beautifully integrated backward, meaning that is what they're. And we would want to be like that. We would like to have the control of the raw materials in our own hand. One, going forward, answering your semiconductor, the next phase of development after the 32 plant, before we put up the backward integration, etc., there are 1 or 2 molecules that we have. Those will not be very big plants, but they'll be like 2,000-3,000 ton plants, which will open up the rest of the fluorine, chain of fluorine molecules for us, which will be the major semiconductor gases that would be required. It would allow us the entire fluorine specialities. Once we do that, once you're manufacturing and you're able to bring it up to semiconductor grade, then starts your approval process, which is like a 2-year process. After the 2 years
from government?
From the semiconductor users like Tata's or whoever the companies are coming. So you cannot just walk in and sell to a semiconductor manufacturer that, yeah, I've got this gas, it's cheap. Suppose Linde is selling at 2,000 and I can sell it at 400. Tata will not buy at 400. There's a process. You have to get approved. So you have to go through that whole 2-3 year process of approvals, of verification, of your reliability, etc. Then it's not just Tata. Basically, they would have a tie-up global. So the global partner has to approve you. So there's a validation process that is there. So not many companies have the stomach for this long gestation validation period. But those who go through with it, you reap the benefit. There is no competition for you. The price set is like 100-200% markups. So you will see the benefit of that gestation period, etc. in this. Now, why is it that we are interested in semiconductor gases? Our Prime Minister has led India down the path of semiconductor self-reliance. If you realize semiconductor itself can double our GDP if it's done in the manner that is envisaged. Now, that is a huge number, and whichever players are associated with it will see the maximum growth. It's also a very profitable segment. Third, most important, all products have a cyclical nature, like helium. Today, helium is, say, at 1,200 rupees. 3 years ago, the same helium was at 4,800 rupees. So you'll say, what has gone wrong? Globally, there's still a shortage of helium. Overall, when you see the plus minus, helium will fall. As we continue growing, helium will always remain in short supply. But the periods of gluts, the periods of cyclical downturns. So what happens is, if you have variety of industry that you're dealing with in the same fluorochemical range, when one product is down in a cyclical downturn, the other product will be in a cyclical upturn. That will balance out and give you a very constant, steady growth.
Okay, got your point, sir.
Thank you.
Thank you.
Thank you. The next question comes from Deepak Poddar from Sapphire Capital.
Hi, I'm audible, sir.
Yes.
Yeah, thank you very much for this opportunity, sir. So just I have a few queries. Now, first on this 3 expansion that we are planning in Khalapur, Mumbatu and Rajasthan. So just wanted to understand what's the respective capex that is going into each of this plant, and what's the commissioning timeline and corresponding revenue potential and margins that each of this plant can see. Yeah.
Okay. Now, for the Mumbatu plant and for the Khalapur plant, the helium plant, these are the only 2 projects for which capex was raised in the IPO. Currently, the activity that is being done at Bhilwara is not covered under the capex of the IPO. Even the expansion at both the plants over what we had planned is not covered under the IPO. So in the semiconductor side, in Mumbatu side, I think it is about 20 crores, and in the Khalapur it is about 30 crores.
Capex, right? 30
yeah,
crores.
The capex. Yeah, 52 crores was the capex outlined. Now the difference is in Mumbatu, we had originally planned only to have 5 tanks and just a simple blending facility. Suddenly we realized the potential, and we also realized that once we start up, we cannot go and take a shutdown to expand each time. So in reality, the project at Mumbatu has been enhanced 2.5 times. Now we will be having a 10 or 12 tank facility. We will be having the same helium and semiconductor facility that we have here. We are setting up here. We'll be setting up there. We'll have hydrocarbon handling capability out there. And the multiple number of tanks and all, to the maximum that plant can be utilized, we are doing. So our capex requirement there has significantly gone up. Secondly, the timeline, what we were planning to come out in by November end, we would probably move into Jan end or Feb. But that would be a plant that is 2.5 times of what was envisaged earlier. And the cost is from internal accruals. The enhancement is all from internal accruals, meaning it goes over the capex requirement.
And what's the revised capex from 20 crores that you mentioned?
It would be significantly higher.
I mean, any number you can put to it? I mean, is it 100 crores, 50 crores?
No. It won't be that much. It would be, basic understanding. The original capex, we had already taken into account that tomorrow we would have to go for this size. So basic things are already covered, like the fire, just giving an example, like the RCC fire tank. We will not go in for a 200 KL fire tank. We'll go in for a 600 KL fire tank. The foundations, when they are made, the foundations will be made for the last expansion. So the capex requirement would jump from 20 to 30 there.
20 to 30 crores. Okay.
Yeah.
And what sort of revenue potential we can see in each of this plant? I mean, at optimum utilization?
See, you have to understand, HFOs currently are under patent, this. Association with Honeywell allows us access to all HFOs which other players in India cannot access. The local manufacturers cannot touch it yet while it's under patent. Maybe one or two other companies who also have access to patent foreign companies can only access it, not the local companies. Now, one of the reasons for delay is we are also working with Honeywell to see the blending and the process, not only for India, for abroad or wherever else it's required, which would allow much more robust working for us and much more fuller capacity utilization.
Okay.
And revenues, all the growth onwards is going to come from HFO growth.
Okay.
So you're asking revenues in terms of, it would have an incremental like 50, 100 crores, 150, 200 crores, like that. It will keep increasing every year.
Okay.
Same way with helium.
Okay, understood. And what about the Rajasthan? What sort of capex and commissioning timeline?
Rajasthan we would be looking at, it would have a minimum requirement of 200 crores in capex, number one. Number two, it would have a requirement for working capital also. The working time, normally a plant of that size, you would take about 18 months. We will set it up in 9 months, working round the clock, night, including night shift, etc. And we will ensure that within 9 months we are up and running.
9 months from now?
9 months from now.
So by June 26 roundabout. And what about Khalapur?
By July 26.
And what about Khalapur timeline?
Khalapur also we should be ready by December.
Your voice cracked, sir. Can you just repeat?
We would be ready by December end or Jan maximum.
December end.
Yeah. Both these plants, you have to understand, we had to completely redesign both the plants. Mm-hmm. Because once you change the whole engineering design from 200 to 300 bar, everything needs to get changed. All the cylinders have to get changed. Everything has to get changed.
Correct. Understood. And just one final thing, Rajasthan one, the entire, the produce will be internally utilized or will be selling from that plant as well?
No, we'll be selling from that plant.
So what can be the revenue potential there in the Rajasthan plant?
At the minimal, at the worst case figure is 500 crores, and a sensible figure year on year by 28, it should be 700 crores.
500 to 700 crores, and that can see a PAT margin of 20%?
Very sorry to interrupt you.
24%.
24%. Okay. Thank you very much. That's it from my side.
Thank you. The next question comes from Ajit Sethi from Eco Quantum Solutions.
Yeah, thanks for the opportunity. Sir, in Q2, we have done around 15% margin. So my first question, is this margin sustainable? And my second question is, this we have done without our manufacturing facility coming online and our new semiconductor process. So going forward, can we increase our EBITDA margin from this level?
No, from the current business, we had promised turnover growth to 430 crores and the corresponding PAT 40 crores. This was not considering the semiconductor or the Mumbai facility. we had committed to this number that we will achieve. We are targeting, and we'll be achieving this. We are happy to say that in the first 2 quarters, we have achieved 50% of the figure, both for the PAT and the revenue. So in the next 2 good quarters, meaning we are confident that we will achieve whatever we had set out. Now, the good thing for the investor group also is Stallion has got such small milestones, 3 months, 2 months, every 4 months. The milestones are so close together that you don't have a long gestation period or a long wait to see, are we actually completing whatever we commit. Like a simple thing, like now if you're talking of this Bhilwara facility, we're talking of July 26. It'll come in 2 quarters, you'll blink and you will be in July 26. So, the milestones of everything that we are speaking is so fine, so close, and so well defined that it's very clear to you whether we have achieved, we have not achieved, did we speak more, did we do as we committed or not. Number 1. Number 2, basically, the revenue growth that will start coming from the helium semiconductor side of the thing, from the Mumbai facility, that will start kicking in and maybe a little in Q3, and from next year it would kick in fully.
Oh, okay, understood. But so as we have guided, we will increase our profitability margin by 3 to 4%. So we can increase from this level, right?
In the current business that we are, this is optimum. Meaning no other company operating in the same field. In the current business, you cannot get more than the current margins that we have. When we start the blending process, when the helium starts, that will up the PAT. There the EBITDA and PAT will increase significantly. That 3-4% what we are saying will come from there. And when you go into the manufacturing full scale at Bhilwara, there the PAT would be 22-24%. That is the kind of returns you'll get. So when you have to understand, if I'm going to do 500 crores or 600 crores of manufacturing, my other business also that we are currently in is not going to go lower. That will also go from 430 to 500 and 500 to 600 crore. So 600 and 600, so one is say 10%, one is 22%, 32 divided by 2, 16%. Like that. So you will see a significant growth in the margins coming in. And later, as the percentage of manufacturing increases much more, like with the backward integration and with the HFO, etc., that time real margins in a year or 2 will jump up to 20%, 22%.
Okay. So my last question is, so our Rajasthan facility will be operating at will come in July 2026. So in the first year, at what utilization we are expecting to operate?
We would hope to have 50% utilization.
Okay, so thank you.
Thank you. We have the next question from Vedant Sarda from Nirmal Bang Securities Private Limited.
Thank you for the opportunity. Am I audible?
Yes.
So I wanted to understand, like we are targeting 30 to 35% growth for next 3 years. I can see that our previous year's sales have been increased unevenly. Like 1 year we have 58% growth, in 1 year we have 3% growth, then 62% growth. So how this growth will be phased out now?
Which year are you referring to?
Like March 23, we can see 226 crores of sales, and March 24, 253 crores of sales. Like it was a 3% growth. And then March 25, 62% growth.
Because in March 24, we had one of our companies, Stallion Enterprises, that turnover was not counted.
Okay.
It got taken over in a slump sale, but the turnover was not counted. The 6-month turnover was not counted. That gap between that 62%, that jump what you're saying, 62% was very high. That one was 3%, one was 62%. It was not 3%. It would have been like 30% and then another 30% like that. But that turnover was not allowed to be counted.
Okay, so we will be seeing 30 to 35% compounded growth, not extraordinary impacts.
No, let me put it this way. I don't think many companies have that kind of growth rate. So it is not an industry standard that 30% will grow. 30% is a very aggressive, very strong target that we have put on ourselves, and we hope to achieve and grow it, meaning through expansion, through backward integrations, through everything. So the plan is to ensure that we maintain that 30% growth. But if you're asking whether it's an industry standard or every other company can do it, no, we don't think that is the case.
No, my question was like we would be growing like 30%, like 25% growth, then 30%, or like it would be 10% in 1 year and 40% in second year.
No, it won't be. It's like this. You got to understand all products are cyclical in nature. There is a cycle, the up cycle, down cycle for all industry. It's not that it's a constant, number one. Number two, there are other issues like right now you're in the quota period. Okay, there are many factors that will play up at this period. Third, you have geopolitics playing out like the restriction on the US imports, the tariffs that have started coming about. All these things will have a major impact. So it's not necessary that every year you'll have a constant 30% growth.
Okay, the last question, like you told, like you are from 35 years in this business, and now you are entering in this manufacturing phase. So what have encouraged you now to enter into this manufacturing of all chemicals and gases?
We always wanted to enter. It's not today. When we started our career, when I started this company first time, 91. In 94, my first OEM customers was Tata, and the first question they asked, what do you see yourself 10 years down the line? So we said we want to get into the manufacture of these gases. So from day one, we have had a single goal. We have not had any change in our direction. To move to manufacturing, you first need to come to a sort of a stable size. You have to come to, you have to have some level of some scale after which you can move into manufacturing. So till you don't achieve those economies of scale, you won't be able to go into manufacturing. So when we achieve that, because of COVID, we are off by about 4-5 years. Otherwise, we would have hoped to have got into manufacturing by 21, 22 at the latest.
Okay. Thank you so much, sir, for answering the question.
Thank you. We have the next question from Jay Mehta from Helios.
Hello.
Hello.
Congratulations, sir, on a very good set of numbers you posted recently. I had two questions. Firstly, what's the progress on the capex of the currently two plants going live, one in Andhra and one in Maharashtra, and also about the Rajasthan plant, altitude.
On the capex of the earlier two plants, one is the Khalapur plant and one is the Mambatu plant.
Yeah.
The Khalapur plant is meaning the construction is almost over. Now the fit out of the plant and machinery will be starting currently. Number one, all the equipments ordered would come in time. Basically, we would expect that by December end, we should be operational in the Khalapur facility. In the Mambatu facility, we had severe flooding. Now, basically, the land, the APIS land is adjoining a lake. And unfortunately, in that early rains in May, all the land, including ours, became a lake. So we 3 months went into first going in for that. If you notice, there's excessive mud filling requirements to raise the height of the entire land by 4 feet, 5 feet. So that was undertaken, and 3-4 months have gone off in that. Second, More than that is the expansion. That plant has been enhanced 2.5 times. So you have to completely change and integrate the entire design of the piping, of the infrastructure, of everything around that. So that has been completed. That plant, the work is on. Like the construction work now is full swing on. Even today it was raining. Last night it rained very heavily, but now there's no longer that flooding rain that was earlier in the season. So work continues. That should become operational by Jan end is what we assume. Equipment, all the plant and machinery, all the tanks are ready, all the equipment, the compressors, tanks, pipes, everything is ready. The construction work is going on now.
Understood. And what about the R32 plant?
R32 plant, basically we have put into the government for all the clearances. See, you cannot, these require environmental clearances, they require clearances from Ministry of Environment and Forest, they require, in principle, they need a clearance from the government to get the license to start this activity of manufacturing of these plants. This is not freely, meaning it's not a free industry where you can just set up and start working on that. So we have already applied the process of all the technical evaluations, all the regulatory requirements, fulfillments, etc. is underway. This should shortly happen. Meaning it takes time. It's not something that happens overnight, but the process is on. The land possession has been taken. In fact, over the next, we will be taking the possession. Our engineering teams will be visiting. Like Diwali, I'm not here. I'm at the land site only for a period of 3-4 days. And we would be sitting with all the teams that are required and doing the evaluation out there of how and when the work can be started, etc.
Understood, sir. So we are yet to receive the regulatory approvals, all the, let's say, the water and all the related approvals. But
all the other approvals are in place. Your regulatory approvals from the government have not come. The process is on.
Okay, but we are confident to start it by July, basically, the plant.
Yes. If you realize one thing, the company has not taken any money from the investors for this Bhilwara project, for which the land is purchased, the work has been started, all the most of the ordering and contracting and everything has been done. It's all been done by the company's internal accruals. So the company definitely must be confident when it's doing all this.
Understood.
See, there's a different confidence when you've taken money from public and then you say, okay, I've put it up. When you put your own money up, that time what happens is you truly have to be confident in what you're doing. Because if you fail, it's going to reflect very badly.
Absolutely, sir. Obviously, I'm going by a track record. Definitely there is something you would be proud saying earlier. But okay, I was asking what's the payback period we can expect from these plans, basically?
The Bhilwara plant should be between 3 and 4 years. Maybe less if it's a good year. Helium, if you come into the good cycle, maybe 1 year. Like I said, helium during the shortage year, 2 years ago when there was shortage, the same 1,000 rupee helium was 4,000. So if you run into that cycle, less than a year.
Okay. That's my answer.
Thank you.
Thank you.
We have the next question from Paras Chedda from Purple One Vertex Ventures LLP.
Yeah, thank you, sir, for this opportunity. So just wanted to understand, when you said on this Bhilwara R32 manufacturing capacity, the peak revenue could be between 500 to 700 CR. That would be for 10,000 metric tons, right?
Yes.
Okay. And secondly, sir, with this Mambatu and Khalapur and the current existing capacity, which is the 23,000 metric tons, right? What would be the peak revenue potential on the current one and number 2 in Khalapur. I'm excluding the manufacturing, which we know now that 500 to 700 crores.
See, it's like this. The current business that we have already given indication. This year we would close at 430. I'm committing 430, meaning when I'm stating 430, we take it as a target that there's no question of not achieving 430. Usually, if you go by the last 2 years track record, if we say 430, we'll always end it on a much higher note, not lower. So 430 is this. Next year, the target would be 500 for this. Now the helium part would be like 50 crores is what we would look at the starting year, the first year. Same way with the Mambatu, we would be looking at 50 crores as the starting year. And then every year it would keep going up, like 50 would become 100 for both the facility and your normal growth that you have here.
Right. So, yeah, I understand. And for the first year for Bhilwara, how much would you put? I mean, assuming it will be probably only activated
if we start on 1st July as we have targeted, it would be about 250 crores.
Okay.
6-month turnover would be 250 crores.
Okay. So we're talking about almost roughly 850 odd crores next year, potentially.
Yes.
But
if we meet our target, then 250 crores will be.
Yeah, all going well. All going well.
All going well, yes. Hopefully all going well, we would reach 250 crores for that. And 500 in the next year. And 700.
And margins would be broadly similar, about 15% odd levels, because that would be about 22%, 22 to 24%. The margins would significantly increase with more backward integration. Yeah, okay, with the manufacturing also coming in.
Yeah, but 22% would be there.
Fair enough. So just to stress this further, so I understand for FY27, I've understood some sort of an indication for now. But I mean, just to stress that, just if we continue with these capacities that are coming up and the current capacity, and of course you've indicated for Bhilwara. So I just want to understand at peak, how much can you expect and extract out of these? And beyond which you'll have to just expand, and undertake further capex.
See, Bhilwara 10,000 tons would remain 10,000 tons. You cannot produce 10,100 kilos because you've got a quota. Second, your plant capacity is 10,000 tons. You cannot produce more than that. So there's no debottlenecking or anything. Now, technically, every 5 years or 3 years, as the government, whatever they set, you will be reducing 15% of your capacity onwards to final phase out. Now, what happens is the price in January, why did suddenly all the shares of the local manufacturers go up? Why was there so much of excitement and everything? The 15% cut came and the price of the gases increased by 25 to 40%. That is what will happen every 3 or 5 years whenever the cut comes. So your realization will go much more. Your turnover will come down. But basically what we expect that the current pricing of 32 would not remain at this level. It would go up. Every year it would go up significantly.
Okay, so that's on blending. Which
not blending. I'm speaking of 32 on its own.
Manufacturing. Yeah, on 32.
Like say 32, I'll just give an example. It was 2 years ago, it was $2.2. It was $1.9 actually. Then it went up to 2.2. Then it went up to 2.7. Then it remained stagnant at 4.7. Then it moved up to 5.5. Now today it's $7.5. In 3 years, this is the flow.
Right.
So why do you feel?
The industry, just this import quota bill that you mentioned on R32, how does it come in? Yeah.
It's not just R32, all HFCs.
Okay. So the imports also will be cut and the consumption and the utilization will be cut by 15% every year.
Yes. Not every year. every 5 years or so, or 3 years or 5 years, it depends. Like I said, currently you see what everyone is talking, what I'm also speaking to you is the broader mandate of the Kigali Accord, which has been signed by the country, and how the other country groupings that have initiated earlier to us, how they have proceeded. We are basically seeing that and saying that this is how it will be done. Please understand, there is no government notification that says this is what will be done. There's no government official communication that says that this is what Government of India will follow. Everyone, including me, is seeing our knowledge. Okay, we are seeing how other countries have done. We know how the Kigali Accord has been outlined. So everyone's, determining based on the broader outlines. And okay, there are certain fundamentals that nobody can change. Even the country cannot change. It's set. But within that, how they frame it, that is the government's prerogative. Meaning, me opening my mouth and saying I would be speaking more than I'm, have authority to speak about.
Right. And just,
Mr. Chadha, I'm very sorry to interrupt you. Could you join back the queue, please?
Okay.
Thank you, sir. We have a follow-up question from Yogesh Soni from NJ Wealth.
Yeah, sir, my question is that do you, after manufacturing, as you said earlier, after manufacturing semiconductor gases and specialty gases, do you think you can patent get patented your gases, specialty gases and all, if possible, for your specialty gases, you can patent them or not? So that you can, you can maintain your margins or you can maintain your uniqueness in that particular sector.
Okay, let me put it this way. I would not like to mislead by saying that we can patent. Yes, if we do something different. See, the way everyone would answer this kind of question would be to leave it in your mind that yes, we can do something and this will set us apart, etc. In reality, how can you patent? I'm just giving an example, like helium. It's a natural product. Nobody can patent it. Now, I'm saying the products like HFC, like R32. It's come out of patent. Everyone is manufacturing. How will you patent? Okay, I'll patent that I have done this something special in my process. Does not give you control over the product. Meaning, I can make a patent on a different part or a way that we have done, but that does not give me any value or any this. It may be used for me to try to impress that yes, we have more control and this will have great income, etc. But it would be a false statement. All the products we are talking about are free of patent. There is nothing that you can actually patent. You may be able to patent some process or some change that you're doing, meaning somebody used a steel glass, you're using aluminum glass. You can patent that I have used aluminum glass. But will it give you any safety, give you any advantage? Will it give you anything? No, it won't give you anything. So I would not like to mislead and say that any of the products can be patented or anything. They're all free of patent. HFOs, the patents lie with Honeywell and one or two other companies. You cannot get the patent. The patent lies with them. The patents will expire in a couple of years. Then it'll be free for everyone to use. What will set us apart? You set up, this is a very small, growing field, which is in infancy. This is actually like baby steps the industry is taking towards the semiconductor gases and HFOs, etc. These will grow exponentially. So today, Stallion sets up. See, there are two ways of handling semiconductor gas. Abroad, maybe to China, or I go to a company like Iwatani or Matheson or Linde or Air Liquide, who is already in the semiconductor field. I say, okay, I will be, we'll work together, we'll explore the Indian market. They say, okay, we'll jointly work with you. So now I bring their fill cylinders and their approval process, and then I become like a trader. One is that route. One is you initiate it that way, but then you go into the backward integration and start manufacturing the very same products. And you go through the 2-year rigorous approval process in the semiconductor field with the main players. Once you are approved, that will set you apart. Then if you are charging 2,000 and someone comes and offers 400, nobody can buy from that guy. They have to buy from you. So that is the key advantage where we would play and grow. But you cannot patent.
Okay, how are you seeing the solar cells, gases for electronics and solar cells? How much growth you are expecting from them? Are they going to form a significant part of your revenues?
They will be a lucrative part of our revenue. They will be a very good insulator against, the common commoditized products. But they will not, each product on its own will not play a major part in our turnover. I'll explain what I'm trying to say. NF3, nitrogen trifluoride. It's one of the key products in solar cell manufacturing. Like it, there are many other products, 3-4 other gases that are used. One is currently you get it from the, where tie-up you have, which is already pre-approved. Tomorrow when you go into 1 or 2 molecule manufacturing that we are looking at, you will also open up this stream where you can manufacture it. That when you go through the approval process, then you will be on par to any of these people. Now, how much NFC is going to be used? Like you're speaking of like 200, 300 tons. Now 200, 300 tons and 10,000 tons or 20,000 tons is not going to play a significant ratio. But as solar manufacturing, as Adani's, Ambani's, Tata's, everyone are growing that business, tomorrow it may become major volumes. Today it's not major volumes. But each of these products, when you add it up together, creates a significant value and turnover.
Okay, got your point, sir.
Thank you. We have the next question from Devant Tandon from FinDoc.
Hello. Am I audible?
Hello. Yes.
Yeah. Hi, sir. Thanks for the opportunity. I have 2 questions. First is if you can share some light on demand supply scenario of R32 in the global market. And second one is it will be really helpful if you can share the capacity utilization across all plants.
First thing is I'll go on the capacity utilization. Current plants that we have are not manufacturing plants, so capacity utilization, meaning during the IPO, basically SEBI and the merchant banker said we want the capacity utilization. What is not a manufacturing plant, it's illogical to speak on capacity. There's no capacity. So it's okay, I'll explain what I'm trying to say. Now I've got a godown. Okay, it's like say 1,000 square foot godown. What is your capacity of this godown? Okay, every day I can unload 1,000 cylinders in it, I'll upload 1,000 cylinders. So is my capacity 3 lakh cylinders? I think it's an illogical sort of a way in a non-manufacturing setup. You cannot speak on capacity. So what started off as a wrong thing, which we could not change because once it was put up in the DRHP, we could not say anything on that. So we continued. But technically, in a non-manufacturing activity, you cannot speak on capacity. Yes, capacity handling, like our debulking facilities, when we say it's 11,000 tons, that what is that capacity we are talking? That is a peak handling capacity if I work fully. Now, you'll say your utilization is not even 50% or 40%. You have to understand that in the fluorine industry, in the refrigerant side, only 4 months, your requirement is like 150% of your capacity. 2 months, you will be at 80% of your capacity. And remaining 6 months, you will be at 20% of your capacity. So as a result, you will never have more than 50% utilization. 50% is also a very high number. You will never have more than 40% capacity utilization. Now, I would like to ask you one thing. If we had to set up a plant, will you take 100% of your 20%, the 6 months where 20% sale is there, or will you take off the 4 months where 150% requirement is there? Because at that time, if you're not able to meet the market demand, you won't even get 20%. You'll get something like 4% in the off season. So your plant capacity, when you're in the nature of the cyclical business, will always be underutilized. Now, this significantly changes when you move into like a manufacturing of a molecule like R32. Here, it is the same principle applies, but here what happens is your capacity actually means capacity. Like when I say 10,000 tons, that means I can only make 10,000 tons. I cannot make 11,000 tons. Second thing is, here the capacity utilization talk comes into very serious focus because your plant capex, your plant running cost, your plant everything depends on how much of this 10,000 tons you manage to produce and sell. Now in a 10,000 ton plant, if I sell 5,000 tons, I'll go into loss. You have to sell 10,000 tons to be highly profitable. You will have a break even of like 60%, 70% manufacturing. So their capacity utilizations come in, but not in the current mode that we are in. Capacity utilization means nothing.
Understood, sir. And the second one is regarding the demand and supply scenario of R32 in the global market.
R32 in India, current requirement in India is anywhere, meaning the figures are not absolutely perfect. The requirement is anywhere between 16 to 18,000 metric tons. The manufacturing capacities in India are much in excess of this. It's like 30 to 40,000 tons after our plant also comes up. So, majorly, your profitable segment is not sale in India, it is exports. Secondly, the air conditioning refrigeration industry if you go by the last 7 years and the next 7-year forecast, has got a 15 to 20% growth year on year. So the capacities will quickly reach up to peak maximum. Secondly, all the next generation gases, the HFO blends, are all 60% to 50% R32. Now it's not just the HFO blends used in India, but globally as the HFO blend use grows, the requirement for 32 would go up. Third is China's capacity reductions will happen one phase earlier to India's. So you'll keep on having a capacity cut there. So combined with the captive use in making blends, in the use for exports as blends and direct as 32, and the growth in India, I think we would be having, in couple of years, whatever seems as excess capacity would even out. The demand supply scenario, what you're asking, currently, technically, let's put it this way, China is the driver of the pricing. And today China is just increasing the pricing year on year because they want to move faster to HFOs. So the price just keeps moving up. Now China is like Saudi Arabia with oil. If China decides that I want to reduce the price, the whole world's price will come down. 85% global, 85-90% capacity is with them. So if they open the tap and say, I want $4, tomorrow the price is $4. If they keep saying, I want $8, the price will go up to $8.
Okay. Thank you, sir.
Thank you. We have the next question from Prasad Vadnere from HDFC Securities.
Hi. So, understanding correct that we are for 10,000 metric ton capacity, only 5,000 will be without AHF, and next leg of 5,000 will be including the AHF, right?
Sorry, the voice was jarring, I didn't hear. You're asking that for manufacturing R32, what is the ratio of AHF and MDC? Is that the question? Hello?
Yeah, I mean, in current capex, hello, am I audible, sir?
Yeah, audible.
Hello?
Hello?
So, in current, hello? So, yes, I'm asking about sensor.
Yeah, you're asking same. So MDC and AHF is used in 2:1 ratio.
Okay. Okay, sir.
The next question comes from Rahul Shah from Crown Capital. Please go ahead.
Hi, good evening, sir. Can you hear me?
Yes, good evening.
Yes, hi. So one clarification with regards to one of the previous answers you gave. So I believe, you're calculating how your top line potential can be in the range of 850 crores if everything goes well, right? Next year, if all your plans and expansion is in place. Now, with this, are you expecting 22% margins? Did I hear it correctly, or was that specifically for the Bhilwara?
It's specifically for Bhilwara. None of our activity here will get 22%. Bhilwara
So
will get 22%. The
and that's
helium,
at the PAT level.
yeah, the helium would generate between 16 to 18%, which averaged out would, raise our PAT up. But 22% would specifically be from Bhilwara.
And at the PAT level, okay.
Yes.
So any sort of still overall consolidated level, can you give a sort of range for the next year, which you expect you can achieve EBITDA margins?
Sorry? I didn't understand. Sorry?
At the consolidated level, any sort of EBITDA margin range you can guide us for, just an outlook you think you can achieve?
Very honestly, this would be again a misleading forward statement from my side if I make it. I should not be making it. Because for the simple reason, it all depends on our capacities at Bhilwara coming into production by July. My facilities are coming on stream by January, etc. So what happens is, if there's any delay, nobody is going to link that, okay, this got delayed 2 months or 3 months or anything. It is the figure that I've said that this is going to, we're going to achieve this. So we don't want to put it this. I have made it clear, very clear that the Bhilwara, whatever production happens, that would enjoy, meaning it's a total manufacturing activity, it would enjoy a 22% PAT level. The helium would be between 16 to 18% PAT level. And the current activity we are in, it will never grow. The PAT level cannot grow, meaning it's at optimum. Yes, in a cyclical year, where the upturn in the pricing, etc. is there, in that 1 year you might see a spike to 13%, but otherwise you're at optimum levels.
Perfect, sir. Got it. Thank you so much. All the best.
Thank you. The next question comes from Prerak Gandhi from Vriksha Capital Research.
Hello, sir. Good evening, and thank you for taking all the questions. Am I audible?
Yes, sir.
Yeah. So, sir, with respect to the Mumbai 2 facility, I just wanted to ask that what will be the target customer base? Do we target the domestic, manufacturers, or are we inclined towards the exports?
No, currently we are looking 100% towards domestic customers. Now, most of the, the auto segment would move towards, the HFOs in 2 years' time. Most of the chillers using 134A would move to blends like HFO blends like 513A, etc. Most of the air conditioning usage would move towards 454B, which is also a HFO blend. Now, the growth in the market is going to be significant for the HFOs, HFO blends, because from this year onwards, the growth of HFOs will be like a constant graph up, and HFCs will be on a constant graph down. So, export once if you're working like we partner Honeywell in this, in the sense we are like the local partner or distributor in India. So what happens is when patents lie with them, they don't lie with us. So how to put it? If we are manufacturing and we are qualified, then it's not necessary that the product is only used in India. If it's required outside, there also it can be done, it can be exported. And technically, when we have control over R32 from our Bhilwara facility, we would be as competitive as anyone else in the world.
All right. Perfect. Thank you so much, and all the best.
Thank you. The next question comes from Jai Prakash Kumhar from Cormont Capital.
Hello. Yeah, hi. So my question is that previously you mentioned that you were not expanding because you needed money and you needed certain size, right? But Then later you mentioned that one of the plant you are putting on your own internal money, and that's where you are serious about that. So if you can just explain it a little bit further, it will be helpful.
Maybe I was not clear because maybe I've not been able to make myself clear in that. What I said was that from the day we started work in this business, we were very clear that we are not into trading. Our ultimate goal is to move into manufacturing. So from the day one, we had a target set on manufacturing, never on trading. Now, if you want to start manufacturing, you have to have sufficient economies of scale or size where you yourself have so much of requirement that it makes sense to backward integrate and manufacture it. Meaning, if you're not selling 5,000-10,000 tons, you cannot go think of putting up a 5,000 ton plant or a 10,000 ton plant. So you need to be in that scale of operations. You need to be having that many plants that can handle that volumes, etc. So number one, till 2020 we were working towards that. Now onwards, when you want to scale up from the current operations that we were to manufacturing plants, you need 200-300 crore capex requirements and higher. Like when you go into the AHF, etc., backward integration, you'll require something like 450-500 crores. When you go into the HFOs, you need 500-700 crores. So basically, that kind of requirements, meaning in-house we did not have. The company is not sufficiently capitalized to do that kind of capex spend. So that was the reason we moved to being a publicly listed company. So when we require to raise the funds for that growth, it's available. That was my point.
I understood that part, sir. But just that another point you made is basically you used your own internal money for certain plant, right? So that's where I got a little bit confused. Like you were able to put certain internal money.
Yeah, if now the company is showing 40 crore PAT and 20 crore PAT, so the money is there now with the company. So everything, why do we have to run to the market and ask? So smaller requirements like now the Bhilwara, the land that we have gone ahead, we have purchased. The basic work, the basic contracting that we needed to do to start moving the processes on. We have already invested in that. We have not come to the market for that. Now for the Mumbai 2 facility, we saw the advantage of scaling up and completing the entire last stage of that plant completely. So we went ahead with that and we've moved ahead and enhanced that project. Both the projects we enhanced, we didn't come back to the public. Where we require funding, we'll come to the market. Where we don't require funding, why should we come back?
Got it, sir. Okay. Thank you.
Thank you. The next question comes from Ashish Soni from Family Office.
Yes, sir. Regarding this qualification with the semiconductor company, so has that process started, and are we going to work with all the major semiconductor players in India?
Once the facilities are up, only after that we can go for. See, first thing is when you go for any semiconductor manufacturer or any, that level of companies, qualifications, you need 3 criteria. First, do you have the testing capability? Now, just to give you an example, semiconductor grade 6 and quality, 99.9999, that kind of quality testing. There are no labs in India that are qualified. Meaning we hear of these big lab groups like SGS and the testing facilities, etc. Nobody has the capability to test this kind of testing because normal usage you don't require it. So why will you buy a testing equipment of 2 crores and 3 crores and 1.5 crore when regularly you don't require to test that? So first thing is you have to have the in-house capability to firstly test it. So you will be setting up. Then second thing is that your testing is genuine and reliable. You have to get NABL accreditation. So our lab will be NABL accredited. Then you have to have the standards, etc., that you will have to import from abroad, and it's not available in India. So you'll have to bring those semiconductor grade samples standards and set up the lab. So that's the first part. Second part is the capability of the plant to handle that level of purity. Third, your understanding and your capability to have the cylinders or whatever requires that to hold that kind of purity. And fourth, is the raw material yours? Is it coming? Now, helium is our raw material as much as it is Linde or anyone. So there it would go as our product. We would qualify it for semiconductor grade. Now, I'm just giving an example like Stallion or NF3 or any other gas that's required. We don't manufacture that. So you have to buy a qualified supplier's product and then qualify it further in your handling process, documentation process, testing process of what you're going to give ahead. Now, you would only do that if you have plans onwards of making that product, because the real money in that would be once you manufacture, you have qualified your own product and in-house you have production of that product. That's where the real money would be.
And regarding this HFO blends you spoke about, right, it's across the industries, and you said you are like Bhilwara some quota limit. Can that be enhanced for you, or do you have to work with government? How does that work? Because the demand side, I think the business on whatever you are telling, it's huge, right?
The quotas once established cannot be enhanced. It can only be reduced. That is why it is important. That is why it is important for Stallion to have taken this move. That if we want to be serious players in the market, we need to be there. We need to have production. We need to have the quota.
Okay. But who will cater to all this demand? Will it again be import, or do you think other companies can also come into this space because the demand seems to be huge based on whatever?
I explained to you how the quota would work. Suppose today you are doing R32. R32 is 600 GWP, 650 GWP. Okay, now I am a manufacturer. I am making ACs. I need to enhance. My business has grown. So I need to grow 100%. So that means I will now need 1200 GWP. But government says, no, you got only 600 GWP, you cannot enhance anything. So I've got two choices. I move to HFOs or HFO blends. HFOs would be like 150 GWP. I can grow 4 times if I move to HFO. Or if I move to HFO blends, I can double my capacity. So the government will move the industry away from high global warming products to low global warming products using this quota as a tool. Now, there are two options for me. Either I move into this or I buy quota from someone who's got the quota already. So if somebody buys my quota, now he's using my quota to just enhance and produce. But now I cannot use my quota. So it removes that much out of the total pie of GWP. The whole idea is to reduce the GWP and move industry faster towards low GWP products.
One last question on the Bhilwara expansion. You said it was supposed to be initially 18 months project. Now we are compressing to 9 months. What risk do you see to really complete in 9 months? Because I think in your other expansion you had range challenge. So because Bhilwara is Rajasthan, some kind of heat or something of that challenge, what challenges do you anticipate right now?
First thing, we are not pulling out a magic wand and saying we'll do it half the time or we are very smart. We have simply done the backward integration halfway. We remove the AHF and any other products manufacturing, any other backward integration, which takes 18 months. Now, our 32 manufacture would take roughly like about, according to us, it would take anywhere between 12 months to 15 months. Now that we can, by working double shift, we can do it in 9 months. So meaning we're not over promising something or we're not over committing something. It can be done. Number one. Plus we've removed what would have taken a long time, like the AHF plant, the sulfuric acid plant, all that we have removed from the current backward integration. It'll be in the next stage. Secondly, Rajasthan working, meaning I would give the testimonial of my experience of having worked across India in every single state. I have never come to a state as beautiful as Rajasthan, where the government is cooperative, the people are cooperative, the local administration is cooperative, everyone is cooperative. And very honestly, you do not face any problem in that state, where you have delays and where you have like literally extortion in many places. You find nothing. It is a beautiful state to work in. Currently, we will go into the cold season. Cold season in Rajasthan, in that area will be like 2 degrees, 1 degree. It's a beautiful time to work. Yes, it will hamper the work a little. Your productivity may not be full swing, but it's a beautiful time to be in that state at that time. In summer, everyone thinks Rajasthan is like, desert or anything. I've seen more greenery in Bhilwara and that area, and I've seen more rains there than I've seen in many places. So meaning we're in a good place to be.
Thank you, sir. There are no further questions. Now I hand over the floor to Mr. Shahzad Rustamji for closing comments.
I would take this opportunity to thank all of you all. Basically, it has been your confidence and your support which has allowed us to reach here and also to look ahead, to grow where we want to reach. We've given a clear indication of what our targets internally we have set for up to 2030. We are working relentlessly to achieve that, reach that in time, and to reach it sustainably. We are not interested in any turnovers or anything which will give us a high in 1 month, 1 year, and then drop out or move. That is why you don't see very high spikes or very high turnover growth or anything. Only what is sustainable long term is what we are focusing on. Also, what is sustainable in terms of maximizing the return on investment, maximizing the returns for our investors and for us, is what we are touching. So it's in a very sustained way that we are, in a very focused way that we are working. It's a very focused vision and drive where we are working towards. And by 2030, we would achieve mostly everything we have set out to do. Reasons are we've got very small, like I said, we've got very small milestones. The difference between Stallion and another company is, usually when you come for a project, the company will say, okay, give us the money, we require 2 years to set up, 3 years to set up, we'll need 1 year to stabilize, and after that the returns will start flowing. So, your milestone is like 3-4 years away. Now, everything that we talk, my milestones are like 2 months away, 3 months away, 6 months away. So every month, every 2 months, as we cross each milestone, it builds more confidence in the investor community. It gives more confidence that yes, the company will achieve where we are setting out to reach. And we look at it as excellent check and balance because it keeps us also on our toes. So I would take this opportunity to thank all of you all for the support and being part of the journey with us. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doosaba's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.